I do think that if we take a look at just the swap spreads, if we try and let's see. So swap spreads took a dive this week. They're a little higher on this chart. This is not an doesn't look to be an accurate ticker. I'd have to find it. Nonetheless, swap spreads took a dive this week and they ended up creating a situation where traders were getting margin called, especially in leveraged bonds. And what this ended up doing is it creates this scenario where you have this global or anyone that has this type of basis trade on where they're long a bunch of spot bonds and short futures and they have to sell spot bonds, right? All rapidly. And you end up in a situation where you essentially have foreign actors, if they're hedge funds overseas, selling bonds, selling US bonds, but it's not for a very political driven reason. It's because they're getting squeezed, right? And I would guess that there was some sort of liquidity crunch in here, probably from the high vol environments that we've been seeing, that sparked an unwind of that basis trade, and it just compounded on itself until it somewhat exhausted itself to the downside. And that we saw the long end get pretty whacked up over that in the last 4 or 5 trading sessions.